All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's off and rolling here this morning. We'll go take a look at some of the earnings, but let's deal with the challenge here first. I have this morning's prices for Walmart and Microsoft filled in. Both are at their auto exit dates if the positions were red. Both positions are slightly green, and both positions still in a good spot to go. They just they simply haven't here as of yet, or gone to enough of a degree to really ink some nice gains for our options. That said, a little bit of gain here, and which I'll take given Home Depot and Intel start, and run with that. So nothing to change here. We do start to come into the green auto exit date for the Walmart tomorrow, and then for Microsoft on Thursday. So those will be hitting here this week. Should the stocks not make make further improvement from the current levels, but overall, solid charts, solid looking charts here. With Microsoft, definitely has that that element of breakout associated to it, and then with Walmart, a little more of a just kind of little bit of pause here, but holds that 7. We see it start to break 120. Could be off to the races. I'm not convinced we're going to see it break 120 this week, though, just given where some of the options are. So we'll see how that plays out. Now, as far as any new signals, there are no new signals on the board this morning. And so if we look at crossovers, on a day like this morning, we don't expect a lot of bearish crossovers, but we do have Pepsi that has a downside 3-7 crossover on it here this morning, but not qualifying as a bearish signal, as it's basically coming off of new highs. And then we have on the bullish crossover list, we've seen a lot of stocks over the last few days with upside crossovers. So this list isn't going to be as big because, we've already seen a lot of stocks, make those moves. But we have Juniper, which, looks like this. No signal there, not even close to a signal there. And then Alcoa, which could easily signal here today, coming off of a higher low. And I'm very curious to see how this plays out. And this is one when it comes to Alcoa where it's on the list. I'm willing to trade it as long as the options are in a good spot. And the options aren't horrible, but they're not great. And so we'll kind of see how they shape up here, and how our current positions shape up here with that. So that's where things are sitting right now. For the challenge, not making any changes here. J&J had earnings this morning, so we'll talk about that just a little bit here. And earnings that I think are a big deal when it comes to this market. Okay. Now, I titled this video Certainty or Uncertainty, and I want to show you a couple things. All right. I'm just going to pull up a chart of the market. This is just a monthly chart, and I have no indicators on here. Right. I don't care about my indicators. Don't care about it. Here we go. Weekly. Let's go monthly. And if we look at the market long term, right, and we think about the moves that happen in the market long term, and the rallies, the pops, the drops, and all of that, almost every one of the bigger drops that we see in the market, if you traded during that time, it's very evident what happened. Right here, this is flash crash. Right, that's flash crash. Right here, this is the Greek euro debt issue. Right here, we had Greek euro debt issue. Right back here in 2015, we had Ebola, right? And that created, one of the downdrafts. And we had China step in and sell a whole bunch of bonds. And that created one of the downdrafts. Right here, end of 2018 into 2019, we had trade war, right? Which is, still going on and everything else. But every major drop, there was some sort of big macro catalyst to go with it, right? Every one of these kind of, should say major, but smaller drops. The major drops were associated with what? They were associated with economic recession, okay? So these little drops, these little pops and drops, these are about growth, revenue growth, and earnings for the market, and what is all that going to look like, and are some of the events going to, take us into recession? When we hit into recession, that's when we see the bigger, sell-offs and drops and all of that. Why do I show this? Well, because there's oscillation all the time, right? There's little oscillation, and if you're looking at a minute chart, some of these oscillations are huge. You're looking at a daily chart, some of these oscillations are huge. But, in reality, the market, even through all this trade war stuff over the last 4 months, it hasn't moved. It hasn't gone anywhere. There's zero trend. It's completely flat in terms of how it's moving. So what drives it, right? We see news drive it, and everyone talks, oh, well, news drives the market. And great, that's a nice statement, and it's not entirely incorrect. But what type of news drives the market, right, in terms of some of the shorter-term oscillations? Well, today I think we have a great example. And it comes down to news that creates certainty or uncertainty. And you think about the markets over the last several weeks, even several months. Have the markets been given a lot of stuff to be certain about? Or have they been given a lot more, well, this could or that could? Right? You think about the headlines you read. It's always, well, China could do this, or the U.S. could do that, or we could see a recession because bonds are doing this, right? Everything's been a, well, could, possible, maybe. That's what the markets have been fed over the last several weeks and months. This morning, the market's a little bit different. The market's getting real data. Let's go take a look at it. This is J.P. Morgan, their earnings. When we look at J.P. Morgan, they beat on earnings sizably, right? They beat their expectations. The expectation line is the upper one here, the actual line is the upper one here, and then the estimated lines are the two below. So we beat on earnings. J.P. Morgan beat on revenue. If you take a look at their revenue growth year over year, 8%, right? That's increased. It was 8% in the second quarter of 2018. Then it dropped to 6%, 5%, 5%, 4%. It's been on a downward trajectory, and we get an upward tick in revenue? Really? With the trade war, with everything else going on right now? Look at the earnings. Double-digit earnings growth. You think about certainty versus uncertainty. What does this create for investors? This creates some certainty. This creates some confidence. This creates an element of, okay, maybe some of all this other noise out there, it's not all that bad. Maybe because what we're seeing in the real numbers right here is pretty positive. Now, is that the case across the board? No, it never is, right? But when we go and we look at a few of these stocks, and excuse me a second. My apologies there. But we look at something like J&J, which has had a lot of turmoil in it lately. They beat on earnings. They beat on revenue. Right? And the earnings beat, okay, whatever. But they beat on revenue. And this is a company that has been going into a revenue recession. And they've gone into that, all right, they have some revenue growth. Wow, really? Okay. That's a decent sign. What about United Healthcare? UNH. This has been a monster out there, right? This has been an investor darling. Still double-digit earnings growth, right? It's not up in the 20s like it was, but still double-digit growth. And if we look at revenue, which is the most important factor, came in, beat expectations. It was expected to be about 5% growth, came in at 7% growth. So it's not a monster number. It's not a blow the barn doors off number. It was a pretty solid number. And it's a number that investors can get behind. Goldman Sachs. They missed. They missed on their earnings. 24% decline in earnings. As the markets have flattened, as the markets have become more choppy and less trendy, Goldman Sachs has really struggled. And we see that historically with Goldman Sachs, right? The trading revenue, gets altered in a big way. Their revenues, they missed. They contracted versus year over year, and that's not a pretty number. Just absolutely not a pretty number. But what does it do, right? You think about it, is that bearish and creating questions about Goldman Sachs? Or is that actually answering questions about Goldman Sachs and saying, hey, you know what? Okay, great. We know what was bad. We know it's there. Okay, boom, it's done. What about next going forward, right? And so it's one of those things whenever we get earnings, whether the earnings are really good, whether they're really bad, most earnings go and create some certainty. And it's why traditionally we do see the markets rally through earnings season because of that increased certainty. Now, occasionally, when we get earnings season, we get a morning where there's a lot of questions raised because of earnings. Some companies come out and say some funky things, and it creates a downdraft because of increased uncertainty, right? But what we have here this morning is an absolute increase in certainty that is going on based on the earnings coming out. And I put into my note this morning, keep an eye on JP Morgan. Keep an eye on J&J, UNH, the ones that were the best. If investors are buying them and they hold their gains, that is an incredibly positive sign for the market. Think about everything the market's been through. JP Morgan is hitting a new high right now, right? If we back this out to a weekly chart, JP Morgan is hitting a brand new high right now. Think about the skyrocketing bonds. Think about, the ugly economic data, jobs reports that have weakened. And we have JP Morgan hitting new highs? Really? Wow. Why is it doing it? It's doing it because of earnings. J&J, you know what? That was a pretty solid earnings report. I don't think we can argue that it's better than JP Morgan, but it is a pretty solid one. If it's able to hold gains, we're talking about a market that investors are going to gain more confidence in because it's more clarity and more certainty. We look at UNH, which great numbers. They're able to hold their gains. We're talking about a market with more confidence and more clarity whose path of least resistance is going to be higher. There are going to be the Goldman Sachs of the world, right? But you think about even Goldman Sachs. Is it being sold? Are they really selling this stock aggressively? No. Yeah, it doesn't deserve to be bought up the way JP Morgan does, right? Absolutely not. But it's also not getting sold off aggressively. Citigroup doesn't deserve to go up like JP Morgan. But what's been the money flow in it this morning? Been all positive. Wells Fargo does not deserve to go up the same way that JP Morgan does. And there goes Wells Fargo, right? This element of creating certainty is an element where when you look at the up and downward waves in the market, you can almost always look at the news factors and say, hey, this was a time of increased certainty. This was a time of increased uncertainty. Think about last challenge. When the last challenge started, we were in a period of high uncertainty. Trade war talk, we had some inflammatory statements come out from China, from the U.S., and, we got into this period of uncertainty, and market path of least resistance was lower. And then we had some economic data, some statements come out that helped to create some certainty, and it helped create this rise. Then we had some more comments create uncertainty. That uncertainty lingered for a long time. We weren't seeing anything. There was nothing for the markets to get, nothing that the markets got to create a little certainty. And then we got some certainty on trade talks that were going to happen. And the market made a short move, but it wasn't a lot of certainty. It wasn't earnings certainty, economic data certainty, none of that. And that bled off. But you think about what we got on Friday. The markets didn't get a silver bullet and trade war is over, but it did get something better than it ever has had. It got some clarity and certainty that the two sides are in long-term negotiations and it's going to last forever. It's not going to be one of these things that's just done and over. And the market finally got that message here on Friday. Yesterday, not a whole lot. Bond markets closed today. Getting some clarity, getting some certainty, helping to push it on higher. And what I'm saying is that the clarity and certainty that is being created is the type of clarity and certainty that gets created when markets go and set brand new highs. And yes, we could see that reverse. We could see, something happen, right? There's always something that could happen to change it. But as things sit right now, and we talked about this ahead of on Friday. We talked about the metrics on Friday ahead of the final verdict for how negotiations went. That yes, something could change it, but the the internal factors are strongly bullish and improving substantially. And, we see that happening here today, and for the right reasons, for the reasons of certainty. This isn't just speculation that China's going to do this or the U.S. is going to do that or Brexit's going to be like this. Yes, there's a little Brexit in here, but this is earnings driven. When you see the bulk of the gains that have come into the market here today, most of them have occurred since the market opened, right? They're buying the earnings. This isn't a Brexit move. This is an earnings move. And these are moves that are highly sustainable and that I do expect to see some significant follow through too. A lot of times these moves, tend to be about 1% in range, right? And so we're getting up there. Markets moved about 1% today. So, I'm not going to expect it to zoom up another 40, 50 points today. It could. But, what we tend to see is a shot and then, a grind. And right now, I think we're in the shot phase, and we could have another few shot days, where we get those, 1% moves stacked on top of each other, before the kind of more stock picker grind that tends to follow them. Okay. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.